Federal elections underway. It'll see Canadians heading to the polls on April 28th. It comes amid trade concerns and economic uncertainty. So, what should investors be keeping in mind? Michael Craig, Managing Director and Head of Asset Allocation and Derivatives with TD Asset Management, joins us now. Michael, always great to have you in the studio.
My pleasure, Greg. Great to be here.
All right, so from a market perspective, we got a Canadian election campaign underway. Do markets typically move off of this kind of event?
Not really. This isn't coming as a surprise. But it does matter on the medium term. So I don't think you'll see much in terms of volatility over the next month. But it's important to think about what the implications are over the medium term for the Canadian economy and the Canadian stock market.
All right, so implications over the medium term and the longer term, to my mind, speak of policy. This election is actually coming at a very unique time for us in terms of what we're dealing with the United States and tariff policy and other issues. Could it be a little different around this time, a different kind of campaign?
I think so. I think the issues that people were talking about 6 months ago have changed quite a bit. This is the election. This is the election about the economy. There are other things, cost of living, that are actually also about the economy, but this is really about the economy. And so it's important to watch what each leader talks about in terms of improving interprovincial trade, tax policy, investment policy, resource investment, et cetera. Those will be key markers in terms of what the economy looks like over the next handful of years.
With all of this uncertainty, we'll call it, the only thing that's certain, I think, right now, I've been told a number of times on the show, is the uncertainty around our trade policy. What has it meant, even apart from the election? There's going to be front and center for the election, but to our sort of investment thesis right now in choppy waters.
From our perspective right now, what we're watching for is the likelihood of a majority versus minority. Not so much which party wins, but just in terms of how efficient will government be post-election day. With majority governments, then you should expect that the top policies they've suggested will be their focus. But with a minority government, it's going to be more challenging. It also makes it very hard for the Canadian government to counter kind of U.S. policy, which we know will continue to come at us for some time. And so for us, it's watching for that. You know, whether we see does any party get over the threshold to form a majority government? A minority government would be a net negative. It increases uncertainty in terms of policymaking. It also may lead to another election in the not too distant future.
On the road to that election day, 5 weeks, we're going to get more news coming out of the United States. We know we're going to. We're waiting for news next week. What's the one thing investors should keep in mind amid all this tumultuous activity?
The one thing that we have is diversification. And this year has been really the return to diversification. Portfolios that are diversified have weathered this. You've seen major differences in returns versus non-U.S. versus U.S. equities, for example. And so that, for investors, it's something to keep in mind, not having so much a narrow portfolio, but a diversified one, because the amount of outcomes that we could see are quite broad, and therefore that's where diversification tends to work very well.